Yeah, ladies and gentlemen, welcome to our second virtual online roadshow. And because of the COVID-19 situation, we are still not able to do personal roadshows and to shake hands and to see each other and to really do like a great Q&A with each other together. But even more important, we don't want to miss to update you on our companies. And we are really happy that we have today the ability to really talk and to listen to Bradford Cook, the co-founder and CEO of Endeavour Silver. My name is Jochen Steiger. I'm the founder and CEO of Swiss Resource Capital, and I'm also the founder and chief editor of Commodity TV and Rohstoff-TV. And we are long time together already with Endeavour Silver. Actually, Bradford and myself, we know each other a good 13, 14 years. And it is a great honor and pleasure to have you today live here, Bradford Cook. And as I just said, gold and silver is really improving today. It was like the last 2 trading days, it looked a little bit like that it's going down, that we might get a little bit of correction, if you want to talk it like that. But really interesting for me is that all of a sudden today also we saw gold jumping by over $20 and silver almost going into the plus zone, hopefully. And before we start with our presentation, because still people are coming in, maybe Bradford, can you give us 1 or 2 thoughts onto the silver and the gold market?
I would be delighted to, Jochen, and thank you for inviting us on. A quick recap since the market crash in March, where in any panic, investors want to go to cash regardless of their holdings, and that included gold and silver. So gold and silver got sold off. Gold literally recovered everything it lost in less than 2 weeks in the sharp bounce back late March. Silver really is just recovering still its losses from the market crash. And of course, that meant that the gold-silver ratio spiked to as high as 125 immediately after the crash. It's now broken below 100. It's, I think, around 95-ish. And where was it before all of this? Well, it was at 85. So I do think it's likely that silver will continue short term to outperform gold as it claws back the ground it lost just this year. And then I think the usual kind of sell in May, go in May will arrive late this year. I think we're still in quite a lively market. And I'm very concerned about the equities in the fall, which means another move for the precious metals in the fall. That's my outlook for this year.
Fantastic. So I think we are ready to start. And also just one remark from my side. Ladies and gentlemen, you see the chat function on your menu. Please feel free to ask questions. All chats are private. There are no names displayed because due to the DSVGO security data law we have here in Europe. And but please feel free to ask any questions, and we will do that after the presentation with Brad. Also, don't get in fear. We do not present 50 slides, but we have the large presentation here. Unfortunately, there was a technical hiccup, but Brad is absolutely fine and capable to go out of that presentation here. So, Brad, I'm starting now the presentation and please feel free to get ready. Thank you very much. Floor is yours.
Very good, Jochen. Thank you very much. And so Endeavour Silver Corp is a mid-tier silver and gold producer with 3 high-grade underground silver gold mines operating in Mexico. The way we stand apart from our peer group is our organic growth profile. And through the construction of 2 new mines over the next 3 to 4 years, we expect to significantly more than double our production and half our costs. So that's my introduction. And why don't we go now to the slideshow?
Yes, the slideshow is exactly here.
I will be making some forward-looking statements today, so you are duly cautioned. And really, the main value drivers, both this year and long term, are fourfold. I already mentioned that we're a mid-tier producer. Optimizing our operations to return them to profitability is job number 1. In the last 2 years, our operations fell on hard times. They started losing money. We launched 3 operational turnarounds last year. There's no way to sugarcoat this. I mean, we had some really challenging times in the last year or two. But after launching these operational turnarounds, we're seeing fantastic results from our largest mine at Guanaceví, and we're expecting similar results very shortly from our second mine at Bolañitos. Third mine is chugging along at break even, and we think we can do better than that. So job number 1, reduce our costs, focus on free cash flow. Job number 2, we have the best organic growth profile in the silver mining sector with not 1 but 2 new discoveries ready for development. Simply by building 2 new mines, it not only drives production growth, significantly reduces our costs, and boosts our profitability. Job number 3, we've always had short mine lives, and through both acquisitions, strategic acquisitions, and our exploration successes, we've been able to, for 15 years now, extend our mine lives. We see much more of that coming. And last but not least, we have a portfolio of world-class prospects ready for drilling in Chile, and in the second half of this year, we're going to take a couple of world-class shots. So 4 value propositions to create value for Endeavour shareholders, short and long term. All of our current core assets are located in Mexico, with the 3 operating mines at Guanaceví, El Compas, and Bolañitos, the 2 development assets at Terronera and Parral, and the exploration properties, not only in Mexico, but also in Chile. Head office is Vancouver. Some of the first quarter highlights, we performed in line with our guidance in the first quarter. Our Q1 earnings were a significant loss as we continued to do the turnaround at 2 of the 3 mines. But 1 mine, which was our worst performer last year, Guanaceví, has actually emerged already in Q1 and back in the black, making money. We were, at the end of March, required by a government mandate to suspend the operations in Mexico due to the COVID-19 crisis. But as of May 18th, we've restarted the 3 mines, again, due to the government decree. And so we're back basically focusing on how to get these mines making more and more money. Guanaceví outperformed in Q1, Bolañitos underperformed, but it's the next one to turn around. And El Compas is already close to plan and just needs a bit of tweaking. We've been continually de-risking our number 1 growth project, Terronera, by updating the pre-feasibility study. And there will be a final economic summary here in the next couple of weeks, 2 to 3 weeks, on the Terronera project before we commit to a full feasibility study. We continue to make new discoveries around the old mine sites in order to extend their mine lives. For example, in Q1, our Mayadito vein at Bolañitos intersected high-grade mineralization, 24-gram gold and 800-gram silver over 1.5 meters. And we launched an ATM for working capital. So our value split is basically Guanaceví, our largest mine, Bolañitos number 2, El Compas number 3, and we're producing right now about 55% of our revenues from gold and 45% from silver. As the gold-silver ratio comes down, that will come back to about 50-50, which was our guidance for the year. Let's have a quick tour of the mines. Guanaceví, our largest mine, also our first mine, acquired in 2004, achieved production in 2005. We really lost a lot of money at Guanaceví last year, and yet look at what we've achieved in the last 4 quarters. With rising throughput through the plant and rising grades from the mine, we've been able to turn this operation around. And we're not done yet. If you can see that in Q1, we were running just over 1,000 tons per day into the plant, but the plant capacity is 1,200 tons per day. What that implies is that from Q2 onwards, as we fill that plant finally for the first time in years with higher grades, this mine could do even better than it did in Q1. And there's some of the stats, the operating costs crashing to $14 all in Q1, $9 cash costs in Q1. Let's move along. Bolañitos, our second mine, was actually our cash cow for over a decade, 2009 to 2018. We pulled more than $200 million of free cash flow out of this mine, but it also fell on hard times in the last year or two. And like Guanaceví, we launched a massive operational turnaround at Bolañitos, but we only started in Q3 last year, so there's another quarter to go before we break out into the black. However, we've got the costs down already. You can see why. with silver and gold grades improving January, February, March, and Q1, it won't take long for Bolañitos to return to its former glory. And there's the increasing tons, again, 1,250 ton per day capacity in the plant. We averaged about 900 tons in Q1, and we can fill that plant here in the next 3 months to achieve profitability once again. Mine number 3, El Compass in Zacatecas. This is our newest kid on the block. It achieved commercial production just over a year ago. It was close to plan in the first quarter. And even though it's our smallest mine, it is accretive to cash flow, and we expect better things from this mine. It's running close to plan, but it can do better than that, and we're continuing to tweak the operational performance, primarily grade. So those are the 3 operating mines, and again, emerging from the penalty box that our stock got put in due to our operational underperformance in the last 2 years is job number 1 for 2020, and it's well underway. Job number 2 is to continue to de-risk and create value at our largest growth project and our biggest discovery to date in the company, with the Terronera project in Jalisco State. At Terronera, we truly have our next core asset. It's a large, low-cost mine potential and a district scale opportunity. Some of the parameters we've previously announced include an operational rate of about 5.1 million ounces of silver and equivalents per year at an 80-to-1 ratio, and from 2 defined ore bodies. You can see the 2 ore bodies or discoveries shown on the map. At Terronera, we continue to tweak the economics. This is last year's economics with $118 million net present value at 23.5% after-tax rate of return and a payback period of just over 5 years. What's special about Terronera is that because this ore body is shallower, thicker, and richer than our existing mines, the cost structure is appropriately significantly lower. And we do expect Terronera to be one of the lowest cost silver mines in the entire silver sector when it comes online. Estimated cost last year, 15 cents per silver ounce net of the gold credit, on an all-in basis, $1.36 per ounce of silver. We have tweaked the production profile, 12 years of production. And you can see the first 5 years average well over 5 million ounce silver equivalents per year, declining thereafter. There's 2 ore bodies shown in vertical or longitudinal section view. Here, the Terronera is the big one. It's 1.4 kilometers long, 500 meters deep, 6 meters average thickness. Every color on this map is basically ore except for blue. Blue we'll leave behind. La Luz, the second ore body, it looks almost as big, but it's only just under a meter thick. So look at the grades though. La Luz is a special ore body. It averages 1.2 kilos, average silver equivalent grade. And we're proposing to mine it in the first 3 years. That's why the front end of the production profile is higher than the back end. We've already purchased the land for the mine plant and tailings. We've been engaged with the community now for several years. We have a full community license to go ahead, and we have all of our government permits to build. At Terronera, some upcoming catalysts include finalizing the economics, considering entering into a feasibility study. If we do that this month, it's because there's less than a year and less than $1.5 million to get the full and final feasibility. What does that do for the company? It actually improves the alternatives for debt financing the project. And of course, we'll look for the board to give us a green light. And these are some of the details of our final optimization. So the Parral project in Chihuahua is the second discovery in our pipeline. It's also another famous historic district. You can see some of the old mines shown in the photos here, plus our drill rig. And in fact, we control a massive land position in this famous old district with 4 famous old mines, Veta Colorada, San Patricio, Palmilla, and Cometa. And like Terronera, this is a potential core asset. It used to produce 4 million ounces a year from the Veta Colorada alone up until 1990. We've already got more than 45 million ounces of silver equivalent resources drilled out. We think that can grow substantially. It's a district scale opportunity. And it's not as far advanced as Terronera. We're just working now on a bulk sample. We're evaluating whether or not there's a potential for some small scale toll milling of ores during the economic feasibility period here. and we hope to have our first economic study by year end. So that's Prowl. And then last but not least, we do feel it's important to break out of the small, high-grade underground vein miner mode. It's difficult to grow as a company when the ore bodies that we mine are typically smaller. And where do you go for large silver ore bodies? Well, South America is home to some of the largest silver discoveries in the history of the world. But they're located in Bolivia. We weren't going to go to Bolivia, but the geology continues south into Argentina and Chile. We selected Chile for our world-class silver projects. And through the bear market, we were very successful at acquiring, through a combination of staking and optioning ground, 3 high-quality world-class prospects. Cerro Marquez, which turned into a bulk tonnage porphyry copper gold target. Paloma, which is our high sulfidation epithermal gold silver target. And Aida, which is a true Bolivian-style bulk tonnage silver lead zinc target. We are ready to drill. We have permits for drilling at Paloma, and we'll drill Paloma in the second half of this year. Aida, we're still waiting for the drill permit, and we are planning now to drill that in the first half of next year. All of that adds up to a sector-leading organic growth strategy. We have 3 operating mines off which we can leverage our cash flow as the silver price rises. We have 2 development projects, one of which is ready to go at Terronera, to almost double our current production and significantly, as in half, our operating costs. And in Chile, we have 3 opportunities to make a world-class discovery. Shareholder information, there's 143 million shares issued. We're trading around $2 US. It's about a $300 million market capitalization at this time. Healthy balance sheet. At the end of the quarter, we were running working capital of 27 million, cash of 15 million. The VanEck GDXJ index fund owns about 6% of the stock, and Fresnillo, the largest silver mining company in the world, has a 2% toehold in Endeavour. One last comment, we do have, because of our silver gold only exposure, no copper, no lead, no zinc, one of the highest betas to the silver price in the entire sector shown on this slide. And so we not only have a great liquidity in the stock, we have great leverage in the stock. So jobs for 2020 to create value for shareholders, complete those turnarounds and make them sustainable at the 3 operating mines, continue to expand our resources in and around the existing mines, optimize the Terronera PFS, and let's get going on full feasibility, and let's get the first economic study done at Parral. We always look for opportunities to grow through M&A. Obviously, that's a 2-way street, and you have to kiss a lot of girls to find the right bride.
That's like in real life.
So why invest in Endeavour? Well, we're a mid-tier silver producer. Our stock is in the penalty box due to underperformance in the last year, but you've got an experienced management group who've been together for years. We have one of the most compelling organic growth profiles in the silver sector, a strong balance sheet, no long-term debt, and we're a pure silver gold player. So thank you very much.
Fantastic. Bradford, thank you very much. I will stop that here. Now we are back. Ladies and gentlemen, I urge you really to use the chat function, please, and you can write your questions in here. We have already a question here from Tristan. Your neighbor, Vangold, operating only 5 kilometers away, recently had a bulk sample of over 1,000 tons processed in one of your mines. Could this offer a possibility to recommission the El Cubo plant on a toll milling basis?
Short answer? No.
Yeah. You want to say why, or it's, let's say, secret information?
It's better if I don't comment.
Okay, good, perfect, no problem.
We are looking at opportunities near Cubo. There are companies with resources, not Vangold, near Cubo, and we are looking at something that would be more material in order to restart Cubo. As you are well aware, we suspended operations at the end of November last year because we basically ran out of our own reserves. Mm-hmm. There are reserves adjacent to the property owned by other people.
Okay, fantastic. So there's something still going on, I would say, right?
Yeah.
Good, perfect. Then Eric is asking, you have started your mines again, but Mexico is in phase 4 this week. The whole country is still closed down. So how did you manage that? And his wife is Mexican and lives in Mexico City. So she is even only allowed to go to the grocery store.
So at a high level, Mexico was very late to do anything, and then they went straight to stage 2, shutting down all non-essential industries, including mining. That happened at the end of March. However, in May, the government recognized that the distribution of COVID-19 in Mexico was very lumpy, and there were many, many areas, many municipalities where there was either no or very low incidence of COVID-19. And because of the impact on their economy of shutting down their non-essential industries, Mexico elected to selectively reopen areas with low or no COVID-19. Now, as you can imagine, mines are in mostly rural and mostly isolated areas, so they're mostly in municipalities with low or no COVID-19. For instance, when we put our COVID-19 prevention and response plan into place mid-March, well, we've been running now for 3 months without an incident. So I think it's important to recognize that opening up can be done on a regional or local basis. Shutting down had to be done on a national basis, and it was actually the government national emergency that shut all non-essential industries down. But it was a government decree to allow for selective restarts that allowed Endeavour and many other companies to restart our mines.
Great. Peter from Zurich has a question and it is about Chile. How much recent experience does your management have in Chile for your projects?
Well, the person who manages our Chilean operation is a Chilean geologist, senior geologist who lives in Santiago and is our country manager. So we have a great person to manage our affairs in Chile. Our VP of Exploration, Luis Castro, has been down there now many times, negotiating the acquisitions, staking the ground, and then running all of the exploration programs. So we're very comfortable with our knowledge of these systems. And geologically, they're not that different than Mexico. They're basically epithermal systems and all related to porphyries.
Okay. During the shutdown, how have you handled all your employees and let's say the contractors and stuff like that? So have you had to still pay them? Have you lost a lot of money with that? Or how did that work? On what basis?
Well, our Mexican government, in their wisdom, decided that everybody should shut down and send their people home to stay safe on full pay. So we basically burned $5 million standing still in April and early May. But we're back up and running now.
Okay. Is that one of the reasons why you're doing the ATM?
Well, we've had an ATM in our financial portfolio, if you want to call it that, for several years. And it's primarily there to fund our growth. Because when the markets get hot, as they tend to do at least once every year, it's a very useful way to raise money at higher prices.
Okay. Dominic from Munich is asking, are you a takeover target?
Well, thank you for the question.
Yeah.
I don't think at this time we are, but we are trying to build not only new mines, but effectively rebuilding the company so we can recapture our former glory. And I think as we do that, as we deliver Terranera and ultimately Peral, yes, absolutely, we'll become a target, but not yet.
Exactly. For the right price, everything is on sale. Yeah, Joachim from Munich is asking a question on the announced pre-feasibility study on Terranera and the announced optimization. What is your expectation, for example, on cash costs? And the second question is, what is the reason for the time lag on the optimization? Can you hold the time for the update mid-June?
Yes, we'll deliver in June. I'll explain what went on in the first 5.5 months of this year. We published a pre-feas update last year. We then decided it would be good to have a second engineering group come in and do effectively what's called a gap analysis or an audit of the previous work. And we were expecting that would optimize the project, make it more efficient, lower cost, higher profitability. But in fact, the project went backwards significantly. And what we found through interviewing this independent engineering group was that they were doing work that we didn't actually ask them to do, and we felt it was wrong. So, for instance, just for a simple example, there's several examples, but simple example, we had a very rigorous mine reserve calculated by our previous engineering group. We didn't ask for the new group to redo our reserves, but they did anyway, using a completely different methodology so that you couldn't compare the two reserve estimates. And somehow they carved 7 million ounces out of our reserves. And of course, you can imagine the impact that had on our economics. Well, they were just plain wrong. They approached it from a super conservative point of view. And we went to a third party. Actually, in February, we hired a new director of project development. And Ernesto Lima has been a breath of fresh air in the group. We wanted to take this project in-house anyway. And his full review of both engineering studies came to the conclusion that the two parties had used different methodologies, so they weren't going to agree. And the only way to get a more optimized project was for him to lead this final iteration of our engineering studies with yet another engineering group that he's worked with in the past, auditing as we go. So since February, Ernesto has been the one doing the optimization for the final PFS, and that's why we now know that we can deliver this in June. And we also know it will be a nice optimization on the numbers I read earlier in the presentation.
Super. So some positive surprise potential, I would call it. That's
Correct.
great. There is again a question about that Van Gogh thing. I'm not sure if I can ask you, but I still do it. You can still refuse to not to answer it. But Günther from Zurich is asking, I would like to hear about your deal with Van Gogh. Is Van Gogh only using your mill, or could we see later a joint venture?
The deal's very simple. They wanted to test 1,000 tons through the plant and see what the commercial recoveries are. We had several options on how to structure that deal, and we chose the simplest. They paid us a straight fee per ton in order to process the material. That's it.
Okay, super. I have also a question for you. As you announced some really outstanding drill results from the El Curso vein at Guanaceví with 1,085 grams of silver over 3 grams gold over 10 meters, and also several other really super high-grade results. How important are those results, let's say, not only to bring back Guanaceví into the profit zone, but also, let's say, to enlarge the mine life and also for the future to stay into in the profit zone?
So, as you know, we hit the reset button at Guanaceví last year, and it wasn't just improving the operations, putting a new mine manager, reducing the workforce, buying new equipment, changing the mining method. All of that we did. We basically did everything. But it was critically important that we gain access to more ore. And we've been working for many years on an acquisition of properties immediately adjacent to some of our historic ore bodies. And finally, in July last year, we got that deal done. That's the El Curso. And what that did was it allowed us instant access to possible extensions of 2 old high-grade ore bodies. And we very quickly went to exploration and development at El Curso to add it to the list of ore bodies that we're currently operating from. And right now, Melache and Santa Cruz Sur are 2 wholly owned ore bodies producing ore, but El Curso, a 3rd ore body, has come online in recent months, and we're not finished drilling yet. So those drill results that we announced were actually a new area on the El Curso property, and it opens up a very significant possibility for several years of life extension. And at great grades.
Fantastic. And it's also no problem for you to process those extra high grades.
Correct.
Great.
By the way, I should also mention, there are opportunities like this in Guanajuato around Bolañitos, including properties adjacent to historic ore bodies where we had to stop mining at the property boundary. So stay tuned in Guanajuato as well.
Okay, fantastic. And this is probably the same like with the Meladito vein, because you had 24 grams gold and 787 grams of silver. So I assume that that was also very important for the future of Bolañitos, right?
Yes, last year we found a vein called San Miguel. It was an extension of the Bolañitos vein. This year we found the extension of Mayadito, which is on the adjacent ground to us at Bolañitos. We just traced it onto our ground. So there's still lots of exploration upside at Bolañitos, but there's also acquisition upside.
Fantastic. There's a question from Gary from Zug. He's asking, Zero Marquez, does Q4 drill results geologically encouraging mean economically disappointing?
Well, if he's asking if we hit 500 meters of 0.5% copper, no. Clearly we would have announced that. So it was economically disappointing, but given the scale of the opportunity at Cerro Marquez, given the what we saw in the drill core and the higher grades that we bottomed in, we feel that there's an entire system of porphyries. They're deeper than we thought. So we drilled mostly down to about 300-400 meters, and then one hole went to, I think, 700 meters. And the long, deep hole actually got much better results. Are we going to use our treasury to continue to chase that depth, or are we going to go test other targets? We're going to test other targets. On Cerro Marquez, there are other shallower targets.
Fantastic. There's again a question from Tristan. He's asking, is El Cubo on care and maintenance, or did you already use parts of the plant for the other mines?
Well, both actually. It's on care and maintenance, but there are some simple pieces of plant equipment that we felt we could use at other operations. And if we do get Cubo back up and running, they're easy to replace. So short answer is both.
Okay, great. When we look at your complete production profile, it looks a little bit like that you are more going into the gold business than into silver.
That's really pretty much a function of the gold-silver ratio, because remember at an 80 to ratio, we were actually about 55-45 silver. But at a 120 ratio, we're actually 55-45 gold. At the current ratio, we're pretty close to 50-50.
Okay, great. So how would you, let's say, describe and or summarize as an outlook for 2020? What do you think you really can achieve, and where do you see your group all-in sustaining costs at the end of the year?
We did guide in January, before all the events of this year, that all three mines would achieve free cash flow on the year. And we're still losing money at Bolañitos. So that implies a pretty good turnaround at Bolañitos in the second half of the year. We don't normally provide specific financial guidance other than our costs. And if you go back and look, we were guiding less than $10 cash costs and I think less than $18 all-in costs. Now, with the increase in the price of gold and the fact that we have a very healthy gold credit, I think we can significantly beat that.
So that means real profits during the year.
Correct.
Super. There's another question from Tristan. How much would it cost and how long would it take to bring El Cubo back into production?
Well, that implies that we have a source of ore, and we're working on that. If we're successful at finding or acquiring a source of ore, it could be brought back online in 30 days.
But could it also be possible, let's say, that, I don't know, some of your close neighbors would come and say, hey, we have access, or can we maybe work together and you still can explore?
Yeah, so the nature of the discussions throughout Guanajuato with various partners are not just we buy, you sell. There have been some requests to consider a joint venture, some requests to consider toll milling, and we're basically evaluating not only internally but in our discussions with these parties, what's the best, where's the win-win? How do we both make the most out of this? And that's what's going on at Cubo right now.
Okay, super. How satisfied are you with El Compass, and what's the outlook there?
Compass has been a little slower than we were hoping, and we're still fighting grade. We had modeled a significantly higher grade, and we're seeing excess dilution from what we originally modeled. That's the danger of modeling versus actual operations. So we're still trying different mining methods and retraining people. Some of it is just our ability to deliver, our ability to not only develop a doable plan, but deliver a doable plan. And because we're just a year into the operation there, and we have had a change of management last year, we're willing to give them a little bit more time to, as I said, tweak the operation.
Fantastic. But I think you also had some problems really in the beginning with some clay, but I think this is completely solved, right?
Yeah, that was last year's rains, and in the upper portions of any epithermal system, there's typically more clay. We weren't prepared, so we had our stockpile, for instance, at the plant was outside. It was exposed to the rain, and so it was a little bit of lack of planning, and now we've dealt with that, so it's no longer an issue.
Super. So problems are solved. That's important. Where do you see the maximum production at El Compass?
I think that there's always potential to double the size of the operation. There's plant capacity for that. We'd have to do a little bit more tweaking on the plant to get it up to double. Right now it's operating at a comfortable rate of 250 tons per day. But it could ultimately go to 500, subject to finding sufficient reserves.
Okay, but you're drilling and you are working on that.
So as with the shutdown of the operations, I should point out for all those listening that all exploration projects basically shut down in April and half of May as well. In fact, we didn't restart our exploration until June 1st. So we're just getting going on drilling at Compass and Calicanto and also in Guana City.
Great. Martin from St. Gallen is asking, is any production?
Can you repeat the question?
Martin was asking if any of the production is hedged.
No,
meaning you are forward selling or you have any floors?
We don't hedge our production.
So you have full exposure to rising gold and silver prices.
We do.
Yeah, that's what we like to hear. So Bernd is asking from Munich, where do you see the biggest risk for the second half of 2020? Is it COVID-19 or is working on the turnaround the bigger problem?
Well, I think we're going to actually see both of those go away in the second half. COVID-19, there's certainly a risk of a second wave. But my personal view is that it will be an echo. If we see one, it'll be an echo of the first wave, not anywhere as big. And we're all now experienced in managing both prevention and response. And it's not like we're going to do away with all of our COVID-19 programs in September. Right? We're going to continue through year end and then readjust as needed. So I don't think COVID's going to be an issue. And in terms of the operational turnaround, well, again, it's just a question of execution at Bolañitos. Bolañitos is the one mine that lost money in Q1, and it needs to finish its turnaround here in the next quarter. So
the next quarter already. That's great.
Once that's done, management would love to turn 100% of our attention to regular operations and really getting going on financing and ultimately building Terranera.
And then Torsten from Zug is asking, are you facing any risks for sales resulting from the lack of silver refining capacity due to COVID-19?
No. There is a tail risk for silver concentrates going to smelters because there would have been a buildup of concentrate prior to the shutdown of the mines. I, to be honest, don't know how our smelters did. I suspect they continued. And what Torsten's really referring to is actually a refinery problem, that the refineries got really busy. And it was hard to buy physical metal. Only one of our three mines produces doré, which we refine into pure bullion, and we so far haven't had any issue in refining that doré because we do it in Mexico with met mixed to Peñoles.
Okay, and so that leads to the question, how do you sell your product? How safe is that for you?
Totally safe. We've been doing business with met mixed to Peñoles for 16 years. In fact, pre-story, Jochen, when there was a new valuables vault opened up in Singapore back around 10 years ago. I had the chance to tour the precious metals room, which was in the basement of a 7-story building off the runway at Singapore Airport. And 7 levels of security get down into the precious metals room. It was just one big, basically empty room, and all the walls were occupied by safety deposit boxes, cages, and the silver wall. They didn't bother because it was just stacked pallets of silver. And so I went straight to the silver wall. These are all privately owned bars, right? This is not some bank that owns it. These are privately owned bars. And there must have been, I don't know, 150 tons, maybe 200 tons of silver stacked on the wall in individual ingots. And the first one I looked at was stamped Mexa Pinoles. So some of our silver was sitting in the valuables vault at Singapore.
Okay, great. Gary is also asking, Bolanitos, can you explain the strange figures? Cash costs minus 400% and at the same time the AISC plus 170%. What happened?
Yeah, so the difference, of course, is the sustaining capital, and in a turnaround, the capital that we're investing to affect the turnaround hits the all-in sustaining cost, but does not hit the cash cost. So again, what is cash cost? It's the snapshot of the cost to run the mine for a day. Cash in, cash out. And Bolanitos looks really good. But on an all-in basis, the capital needed to affect the operating turnaround is still causing it to lose money on an all-in basis. And that will change here in the next 3 months.
Okay, great. Heike is asking, how do you see the development of industrial use of silver following COVID-19 and all of green deals running around? I could imagine e-mobility, solar, all that kind of stuff, hybrids, hydrogen cars, etc.
So there's been 3 disruptive technologies since I started this company 16 years ago. The first one, which we really rode the wave from 2003 to 2008, 2009, was the boom of electronic goods and the emergence of China as a consuming nation. And that was the primary driver, industrial demand driver behind the price of silver at that time. In around 2010, 11, 12, solar photovoltaic panels became the fastest growing industrial demand component, and we're still riding that wave. But the question really was, what about all these green technologies? And silver is truly a green metal. You can't have solar power without silver. You can't have electric cars without silver, even though electric cars use a tiny amount of silver, maybe up to two ounces per car, which means that you're not going to scrap the car to recover the silver. Like $34 of silver in a car. Okay, that's because it's not the wiring, it's actually just the contacts, the electrical contacts. And but that's double what conventional cars consume for their digital electronics. And when you think about 55 million ounces last year going into the conventional car business, and any of the 10-year forecasts for the boom of electric cars coming, that could be another 100 to 150 million ounces of physical demand in 10 years. Where is that silver going to come from? So this third emerging or disruptive technology, electric car, which nobody talks about when they, silver is not in the conversations. Cobalt, lithium, nickel, but silver, and yet it's going to have a dramatic impact on the silver price.
Yeah, that's right. I see it the same way, definitely. And this is why I'm also so bullish on silver. And she's also asking, or will silver be back as the money of the poor?
So, of course, everything moves in cycles, and the number one value proposition for silver is money. It was historically used as a store of value and a currency of exchange. The oldest form of monetary debasement, government depreciating their own currency, is actually the denarius coin of the Roman Empire. And around 260 BC, the original denarius coin was almost 4 grams of pure silver, 95% pure silver, just a little bit of other metals. But by the end of the Roman Empire, 200 AD, there was virtually no silver left because the Romans had run out of silver and they'd systematically replaced it with bronze. And you can look at all the denarius coins through that 400 or 500 year period and assay them, and you can see an almost straight line decline. And that is the first example I could find of government debasing their own currency. And of course, it was ultimately that currency was used for trade and colonization. The creation of the Roman Empire was through conquering and trading. And the rejection of the Roman Empire was when they didn't have a currency anybody wanted. We're coming into another phase like that. It's called the US dollar.
Yeah. That's right. Martin is asking, any comment on the silver trading at the COMEX and or at the short positions?
Thanks, Martin. So I have, I think, a little bit different view than many on the incredibly high and chronically consistent short position of silver on COMEX. My view is that silver, amongst all the metals traded on COMEX, is the only one that's primarily a byproduct of other mines. It's a byproduct of gold mines, copper mines, lead zinc mines. More than 2/3 of all new mined silver every year doesn't come from silver mines like Endeavour's. It comes from big copper mines, big lead zinc mines, etc. Therefore, those gold, copper, and lead zinc miners producing silver as a byproduct are much more likely to hedge their byproduct and remain exposed to the upside on their primary metals. Silver for them is a secondary metal, and so silver is hedged. The majority of silver production every year is hedged, not by us, not by Pan American, not by any of the other primary silver producers, by the byproduct producers. That's why silver, amongst all the metals on COMEX, has by far the largest short position relative to its physical position.
Sorry, please go ahead.
Well, so people say, well, it's manipulation and this and that, and because silver is such a small market, it's easy to manipulate silver. I'm not saying there's a conspiracy to manipulate silver, but there have actually been 2 very significant fines against banking groups, one in gold, one in silver, because of excessive playing on the edges. And that's because silver is a small market. It's easy to manipulate.
That's right. Thank you for that. Can you give us maybe some numbers? What is in 2020 primary silver production, like coming really from companies like you or Silver Standard or Kerr or whatever, or Fresnillo? And what is, let's say, coming from second-party productions, like you said, gold, copper producers? And what is coming from recycling? Do you have those numbers?
I don't have it at my fingertips,
approximately,
but from memory, there was 860 million ounces of new mine production last year, and over 650 was byproduct, and the 200 balance was from primary. So you're talking about what, a 70-30 split of byproduct versus primary.
And what is about the recycling?
So the scrap would be. Because it's a billion ounce market, so about 150 comes from scrap.
Okay, yeah, I didn't see that. Okay, super. Yeah, fantastic. Wow, 49 minutes. Jesus Christ, that was a long way to go here. Thank you very much, Brad. As I do not see any new questions here, and I don't want to hold off our people too long. I would say we can probably close. Any closing remarks from your side?
Well, thanks, Jochen. I just want to remind people that. We dug ourselves a hole in our operational underperformance in the last 2 years, and we committed to our shareholders to dig ourselves out of the hole and regain leadership in our peer group. That process is well underway. Going us free, we can put a big check in that box, and we hope in the next quarter or so to put a big check in the Bolañitos box. Then we no longer need to talk about operational turnarounds. And once we get back to regular operations, and I hope at higher share prices, people will be focused on how soon can we get Terronera online.
That's the big question, I would say. Fantastic. Bradford, thank you very much. We look forward on your PFS then, and on all your statements on Terronera, and hope that you can really do fast your production decision, meaning your construction decision, and that everything goes the smooth way. And I would say, oh, hang on, what is that? Okay, could there be webcast instead of phone calls from Endeavour? Yes, we can do that also in the future. Heike is asking that. Yeah, ladies and gentlemen, first of all, Bradford, thank you very much for your highly valued time and highly appreciate it, and to give us all the information. And also thank you very much to all our participants for asking a lot of great questions and really supporting us here and listening to the virtual online roadshow. I think this is a great tool to really keep you guys updated. We will use that also in the future, definitely. And we still hope by September, October that we can restart also with some, I call it physical roadshow. Hopefully you have some physical silver with you. And we want to make sure that we meet us at least this year in person, and that everybody is really healthy and in good shape. And yeah, thanks for the update. Keep it going. Please keep us posted on everything. And I'm pretty sure we talk quite soon again when you have some more numbers, then hopefully also good drill results and the update on Terronera. Ladies and gentlemen, thank you very much for your interest. All the best. Let me only remind you, next week, Tuesdays, 3 o'clock, we have Canada Nickel Corporation on the Online Virtual Roadshow. You have received already a first invitation. The next invitation will go out tomorrow, and hope to see you back there. Thank you very much. All the best. Regards to Vancouver. Regards to all of you wherever you are living in Europe. And I wish you all the best. Stay healthy. Enjoy the evening and have a glass of red wine. That's always good. Thanks and bye-bye. Thank you, Bradford.
Thank you.
Thank you.